Good morning everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 7th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here that the ES has pulled back after the previous session's late day rally. It was mostly sideways for many hours, and then late in the session popped higher and closed higher. And again, keeping in kind with the higher highs, higher lows, ever since this failed low here, which was last week's rejection of the previous week's low, we got a rally, and now we've seen price push through that 3150 level there in the prior session and close beyond it, and now price pulling back into that zone right here, and currently seeing a trap below it. So anybody getting short below that zone here now becoming trapped in the trades here. Anybody when low 3145, 3140, and right now the higher low in the intraday time frame at the 3147s, 3146s, it looks like a bit of an intraday rounded bottom, that if it can get above the 3156 half, the previous week's high there, it opens up quite a bit of upside here back toward the recent overnight highs and perhaps through those highs. So this is going to be very important to see if we can get through 3156 today. Building energy right now. Failure to hold 3145 will open up another round of weakness down below in the intraday time frame. All right, let's take a look here at the NQ. What you'll see here with the NQ again is a big strong finish yesterday. This one squeezed throughout the morning here. Whereas the ES mostly went sideways, finished strong but mostly went sideways. This one finished strong as well after a strong early squeeze, and now you're seeing a bit of a failed high above the previous high and a rotation back down. However, on the intraday time frame again, you know, whether you're looking at a 5-12 tick chart or an intraday 5-minute or 4-minute or whatever time frame you're looking at there, you'll notice that a rounded bottom is also forming in that time frame as well. And while those can break to the downside there, that is indication of a bottom here, at least early on, off the 10.529. So again, if price can hold 10.530 overall, we have a good shot to try to rebound back up above the 10.580, 10.600 zone. Above 10.600 again opens up a continuation higher. So right now, we'll see if price can continue to stay above the 10.550 on an intraday basis. Above that zone, continues to squeeze in the near term. Failure to hold that level opens up a further rotation on an intraday basis to the downside. All right, let's take a look here at crude oil. Right now, crude oil is down about 0.5%, but is bouncing, or has bounced just off of a couple of key levels. You can see right there, that blue dot is the previous month's close, that close price, and that yellow line is 39.80. That is the 8-period average. Again, we've talked about how that has continued to be support or very close to it. Today, price did drop down to those levels, rejected them. That was below 40. We saw an absorption signature off of 40 that led to this current bounce back toward 40.40. So on a basis here, on an intraday basis, holding that zone again, very bullish. And now on a swing basis, you're seeing a failed low, rejecting the previous session's low, and now pushing back above today's midpoint. If it can close above this mid today, so if price closes back up here, perhaps closes above the open, that could be a very strong indication of follow through to the upside heading into the end of the week. So that failed low is going to be something to watch here. Failure to hold 40 on a closing basis could be bearish on a short-term basis, perhaps back toward 38.50 or as low as 37.50. Okay, let's take a look here at gold futures now. This one's down about 0.5% as well. Again, not really able to find much acceptance above 1800 at the moment. Big time level there. Traded a couple of times over 2 days there above that zone, but right now here's the previous week's or month's close, rather, the previous month's close right there, and that's going to be important again because bears are defending, yet you see how bullish the uptrend has been. You see how the PIMA trigger zone has continued to be defended, especially at that 8-period here, and so any bears that are coming in, you're not seeing get paid right now, and anyone coming in to defend this Pima trigger zone could be on the verge of an upside squeeze. Again, if this thing gets through 1800, you're likely going to see a move into that 1831 very, very quickly. 1831 is that key range target that we talked about before. And again, this market continues on a path toward that 1831. At the moment, coiling up pretty nicely here on a 6-day range basis. We're at 67% of ADR. 1, 2, 3, 4, 5, 6 days. If you were to squish this even lower, say to a 3-day or 4-day or 5-day, you're still getting compressed. So this thing is really coiling up and looking for a major breakout here pretty soon, likely to the upside given the overall trajectory and this trend that we're seeing here. So again, if we can break through this zone, it opens up clear air above into that 1831. Failure to hold 1760 again would suggest that this thing could be breaking downwards. So 1760, 1750 would be a failure point. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.